The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon out near Cape Canaveral discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here, and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
29th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Thursday. Now, let's make sure that you and I, we do everything we can to have a fun-filled, to have a fantastic Friday and holiday weekend. Because after this hour shuts down, for me, I won't see you again till Tuesday morning. So make sure that you are safe out there. Now, I do appreciate you joining us here this morning. If you're off to, if you're maybe heading out, you're listening to us on the radio as you're driving out, or maybe at TFNN.mobi, make sure that you're driving safe out there. What I'm going to do during the next hour is share with you extraordinary tools that help us to identify where price is headed to. No matter what it is we're looking at, whether it's a currency, a commodity, a stock, whatever it might be that you are trading out there. And, you know, those tools include that A to B equals CD tool. It includes Fibonacci expansions and retracements. It includes candlestick charting, because bulls and bears, they have to report to work each and every day. And the good news is they leave signals. They leave signs for us. We just have to read them. And each day, you and I, everyone in this world, we all start off equal. We all start off equal with 86,400 seconds. And I appreciate that you're going to spend 3,600 seconds with me. Of course, we've got 10 hours of live programming today, so stick here with TFNN and get the latest as this market moves. Or maybe it won't move too much today, as it is a holiday, the last day of summer for many out there. Now, it's an interactive show, so it's a great opportunity for you to give us a call at 877-927-6648. Internationally, you can call us at 727-445-1044. We would love to hear from you, maybe answer any question. Maybe you're going to do some work over the weekend and take a look at charts. Maybe you're going to try to identify or figure out a pattern. Give me a call. I'll do what I can to help you out. So, look, this is Fantastic Friday. Of course, it's TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow futures up about 16 points, trading out at 17,093. NASDAQ's up 6 points. ES Mini up a couple of points, trading at 1999 and a quarter. Russell 2000 up a point, trading at 1167. U.S. dollar index is flat. Currency is relatively flat right now. Biggest movement seems to be inside the Japanese yen. Goldilocks back $2 right now, traded at $12.88. Silver is flat, traded at $19.52. Light sweet crude is up 63 pennies. She's traded at $95.17. A quick peek across the globe out here. Let's go see what's going on over in Europe. Right now in Europe, the DAX is off 15 points. The FTSE is up 6. Flat market there. I would expect us to see something similar here today. The Nikkei down 35 points last night, off 0.25%. Unchanged, really, in the Hang Seng. That was up 1 point. The Shanghai was up 22 points. That was up about 1 full percentage point. In the pre-market out here, dropping. No, there's not much dropping to the downside, or at least nothing that's updated on my screen as we speak right now. If we take a look at what is leading the charge to the upside, you got Tesla, Splunk probably making the biggest move. Now, Tesla's going to open above its highs, its most recent highs out here from August the 18th. Those highs right now are at 267.26. Splunk with numbers, I believe, after the bell, and they're moving topside. They right now trade at 48.20, closed at 45.20. 45.29. It's going to trade right now into this July 30th high. That high is at $50.97. Hey, let's go down to Boca Raton to our man Bill. Bill, thanks for calling. Thanks for holding. How you doing this morning?
Doing fine. How are you, sir?
Excellent. What do you have planned for your holiday weekend?
Probably a lot of chores around the house that I don't get to, or let's say catch up on chores.
Okay. That sounds good. You wanted to take a look at Mallinckrodt Publications. I don't know that Mallinckrodt. How do you pronounce it? Do you know?
Don't ask me. I just know that. And by the way, did you say it was a publication?
That's what shows. It says pub. Maybe it's a bar. Maybe we should go to the Mallinckrodt bar. Maybe it's a pub.
Well,
I can find out what it is, though. I can find out what it is.
That's okay. I think, at any rate, what I'm looking at is I'm looking at a daily chart. And back on April 7th, there was a tremendous amount, over $20 million in selling. Okay, and then you come all the way over to August 18th, and there was a big purchase, almost the same amount. But then here's what gets confusing. If you go to a weekly, that volume bar back on April 7th looks positive versus negative because the stock closed up that week. So how do you, you just keep looking back and forth and saying, okay, it's a fake looking at the week. It should be looking at we should be looking at the daily, but look what happened in the daily after somebody sold the bejeebers out of it. It went from, just under 60 all the way up to 82 in a heartbeat.
Are you
now
in this?
Now it has a rounded thing, and over here where the volume came in, it got rounded, and I jumped on it, and obviously I'm doing kind of well. But, I just don't know where to go from here, and why is it looking differently in the two different charts?
Well, if we take a look at the weekly, okay, so you bring up a good point, and it's what we have to do is do our best job to interpret what's going on. And if we start off with that weekly high volume-ish, very high volume bar low, the top of that low is one of the things that I would key in on, which was $68.09. And what's interesting, if I draw a line across the chart on my screen out here, is that when price came back and tested that the week of August 4th, it was 12 million shares testing 44 million shares. And now that also happens to be a swing point. And it's at that swing point that you really learn the most about what's going on inside an equity. And as price was coming back into that area, what it was telling us was it didn't have enough volume to drive down lower. In fact, it was rejected. So that group of buyers out there on that week of April the 7th, 2014, they were telling us that the price was not going to go lower. And they actually told you in kind of a large way on the week of August the 11th. And the reason that I say that is because price had pushed down enough to maybe consider it, if we take a look at the daily, it probably was an oversold condition. And on the weekly chart, what it produced there was from a weekly candle formation, that's called the bull separating line. And on a scale of 1 to 5 of a two-candle formation out there, with 5 being the strongest, bull separating line is number 4. So that's pretty strong. And it was a key reversal week out there. So your decision to go ahead and get long would be justified just simply based on the fact that price pushed lower into a swing point with light volume, was rejected, and then you got some nice bullish reversal signals that week of August the 11th. Now, what was even nicer was on August the 18th, it closed above a market profile resistance level. So that alone is nice. Now we have to switch back to, okay, what's it doing at the current swing point? And the current swing point is weekend of July 7th. Now, July 7th, that has probably the July 3rd. I don't know if July 3rd maybe was the Friday. I don't know. But let's just forget about, at this stage here, what I would say, Bill, is that swing point has 9 million shares, you're certainly in a late trading week this week. We know that. And you're already up with 12 million shares. So you're coming into a swing point with volume. That's a good thing. What you'd really like to see it do is you'd like to see it, that says it should at least test the high. So $83.20. So that's what the weekly chart is saying. Any questions so far about what I said, about the analysis on the weekly chart for you?
No, I'm good on that.
Okay.
What I'm wondering now is, where do we go from here?
Okay. So let's look at the daily chart. Let's see what information we can glean from the daily chart out here. In the daily chart, now we're going to take a look at the swing point that it closed inside yesterday. So it closed inside the July 7th high, or swing point. That had 1.6 million shares. And yesterday you were moving into it with 3 million shares. Boy, you like to see that. So you're moving into a swing point with volume. It should be able to not only test the 83.20 level, but it looks like it's trying to set up to be able to take that level out. Now, here's the thing that you really want to see. Either this is going to set up a triple top or it's going to go ahead and break out. And if it breaks out, if you get above that, we'll call it, so I'm taking a look at two different swing points, right? You've got the swing point for May 20th. That's got 1.9 million shares. So you're moving up into that with volume. If you can take out that level, by the way, is 83.03. So 83.03 and 83.20. Well, that's 83.03. 83. That says 83.03. And this one here says 83.20. Okay, so it's really the 83.20 number. If you can take that out, then you're going to have a confirmed A to B equals CD to the upside. If you're asking where would that take you to from a price standpoint, that'll take you to a projected price level of about, gives you a price projection of 94.09. Right around there. But what you really want to see is you want to see that swing point being taken out. Ideally, you'll see it move kind of sideways and not test that. What you don't want to see is testing that level today on light volume. Because then you've got, on a daily chart, you've got a triple top out there. What that would say to me, Bill, is that you're more than likely, if it can't bust it out, it'll come back and it'll test that August 15th bar that you were looking at. I'm sorry, August 15th, August 18th level right there. That's where it would pull back to, which is in the 71 to 73 to 75 type level. So are you looking at this as a longer-term trade investment? What's your time horizon?
Believe it or not, what I like to do on these things is sell covered calls. And it's a matter of, usually Monday or Tuesday I get back into it, and the premium on these calls is ridiculously high. So I've been enjoying that. But since it's got such a great formation here, I'm sitting there going like, okay, hold on, buy the stock, and just wait, and maybe not sell the covered call. As you say, if it breaks out above the swing point, just ride it up to 94.
Yeah, it's moving into a swing point with volume. That's what you like to see if you're long an equity, in this case here with it moving up. And if it breaks 83.20 with volume, with more than 1.6 million shares, 94.09, I could make the case that 101.40 is likely the next stop.
Wow. Well, thank you.
You betcha.
Take care.
You bet. That was Bill in Boca Raton. Ticker symbol there was MNK. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. That company we were looking at with Bill in Boca Raton, MNK is a ticker symbol. Now, I don't know how to pronounce it exactly. Malin Court. The reason is spelled MALLINCKRODT. Obviously an international company, a pharmaceutical company, by the way. That's what they do. They develop, manufacture, market, and distribute branded and generic specialty pharmaceuticals. So that's the industry that they are in out there. Now, as far as what to expect in the markets today, well, let's go take a look at the daily charts out here. Let's get a feel for what we have going on. Let's take a look at the daily chart here for the NASDAQ to begin with. Now, the NASDAQ here has really been struggling. So we know we're in the last week of summer, but what I want you to notice is these very small-bodied candles out here. You had a doji candle out here on August 27th, and for me, at a resistance area. Now we're in, sort of a new territory, right? Not if we go back to 2000, but right now, and it's an indication that the market is tired. And in this case here, it's just as these small-bodied candles are. We've seen nothing but small-bodied candles inside the strongest index since August 20th. So it's a little bit of a warning sign out there. Obviously, we all come back to work on Tuesday, probably more likely Wednesday, right? Wednesday, Thursday, when everybody is back in the saddle, so to speak. If we take a look at the possibilities for finished expansions out here inside the NQ, I could make the case that it ought to punch up to about the 4,093 level. So whether that's today, whether that is Tuesday, Wednesday out there, and that may be the extent of the move inside of the NQ out there, because it's right now in between floors. It's in between the 1.272 expansion and the 1.618 level. And that 1.618 is the 4,093 area. So that's my expectation inside of the NQ. But it is giving us a message of being tired out there. If we take a look at the ES Mini, the S&P futures, they've got a little ways to go as well. If they can make it all the way up into the, let me take that back here. Hold on. I don't even know what this thing has tracked right there. So let me pull that back. Let's take a look at its expansion out here, the correct expansion, which is going to be the high from July 24th down to the low that was put in. And this is the ES Mini we're looking at on August the 8th out there. So the ES Mini on its expansion, its 1.272 expansion, that's the number out here, 2011. You're at 1999. Are we going to see an 11-point move today? We could. Look, if we see the futures, if we see the ES Mini get up to 2011, then that should be an expectation of ours, just a simple expansion out here until it gets back inside the lower part of its range, which would be below the July 24th level out there. That's at 1985.75. Our expectation should be, because we haven't seen a reversal candle or anything, that you ought to see the ES Mini punch up into approximately that area. If we take a look at the Dow futures out here, the Dow futures, they are trading above their swing point high from July the 17th. They made a high that was at 17,085. You're traded at 17,091 right now. If you were to see the Dow really make a move out here, the Dow, its expansion pattern would take it up to 17,323. That's a big move. Not anything necessarily that I would expect today. What would be also up there, looks like we've got the rising price channel. Which one is this one? Out here. Let me see how far back I can take this. So this is the rising price channel coming back into October of 2013. So you've got a diagonal level of resistance. You've got a horizontal potential expansion out there at that 17,323 level. So it's certainly doable. However, if you see it close back inside the futures, that is, back inside 17,085, what we've got here is perhaps a failure. Again, small-bodied candles across the board inside the Dow futures the last 3 sessions for sure. If we go take a look at the Russell 2000, get a feel for what the Russell is doing right now. The Russell 2000, it's made its 0.618 retracement. And that was off of, let me just make sure that it looks like these lines have moved around here. So give me a moment here. Let's go draw those back in. What I'm looking at is the swing point high off of July 1st down to the low that came in on August the 1st. Yeah, so it's trading just above the 0.618 retracement level. That exact number is 1164.80. Right now you're trading, looks like at about 1162. So it's just hovering around there. It's completed its A to B equals CD patterns. Those look like this on this. So what it's really done is it's set up a Gartley sell pattern inside of, I'm going to pull it right back to here. There we go. There we go. So it has completed its 1-to-1 A to B equals CD to the upside. It could move up to 56.60 out there. But the Russell 2000 has a Gartley sell. What it doesn't have any kind of reversal candle, at least not just yet. You get back below the low from August 26th, and the game could change a bit. That's at 11:58:30. 877-927-6648. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 17 points, trade out at 17,097. S&P up 3 at 2,000, even Steven. I like that. NASDAQ Composite up $12, trading out at 45.70. Russell 2000 up 2 points at 11.68. NDX 100 up 11. New York Stock Exchange up 15. Gold back $3. Silver off a nickel. Lightspeed crude up 81 pennies right now. And leading the charge to the upside, Avago, and I do mean Go Technologies, up 10%, up $7.90 out there. Avago Technology is a analog semiconductor. They supply analog semiconductor devices with a focus on 3-V based products out here. Let's go see where Avago Technology is headed to. Boy, taking out swing points. Is this thing at all-time highs out here? Yeah, it most certainly is. Gapping up this morning. Not a, well, I guess the volume is not too bad. About 1 million shares a day, it looks like. So far, it's already done 800,000 shares out here. Let's put this on a weekly time frame. See if we can get, this has been a rocket ship for sure. Let me pull this back further, see if we've got all the data out here. Yeah, take a look at this thing. So it looks like might have been an IPO back in 2009. My data right now going back, maybe I can get more data, but let's not worry about it. Back in 2009, it was trading at $16. Today, it's $84, and it has been one straight rocket ship all the way up. If there is can I figure out where this thing is headed to? Not really. I mean, there's not been a retracement on this, a weekly chart that we're looking at. There's not been a retracement inside this that would really give it. I mean, if I were to draw an A to B equals CD, let's do that. Here's what I would do. I would start right down about here, the week of November 18th. That would be my A point. My B point out here would be this high on March the 17th, and then the retracement for about 4 weeks down into a market profile support level. That's the green horizontal line on April the 14th. So it's done a 1-to-1 already. You're going to hit this for the weekly base. You're going to hit the 1 to 1.272 area of $87 and a penny with a wide-ranging bar. So the next stop, I would have to say, once it takes out 87.01, I would anticipate that it should do that. You're looking at about $95.10. Now, this thing has been a rocket ship. It's got. Let's go take a look at the volume behind this on a daily basis. I have no idea what this big, huge volume bar was on the trading session of May 7th. The reason I say that is because it's not even around an earnings date out there. So I don't know what took place. But what we can see, if I get rid of that, and I take a look at some volume bars out here, you know, if you were looking to get this, you just want to buy it really at the breakout of today. You'd like to see it come back and test this gap. Now, as I pull this back further, will it come back and test that gap? I don't know. It didn't test that last gap that took place here on May the 6th. So that's on Abago Technologies, a little rocket ship for sure to the upside. Also moving topside 17% to the upside this morning. There's, I don't know how you pronounce this, Criteo, C-R-I-T-E-O, CRTO is the ticker symbol. Let's go see, what do? They are they provide internet display advertising services in France. Let's go see what they're doing, what they're traveling into. So they've got a swing point here that it's trying to trade into recently, which is back on July the 7th. That high out there is at $39.30. And that has volume of 486,000 shares. You're up already today with 825, so you're moving into a swing point with volume. Now, if it can take that out, let's pull this back here, what it will do is that will set up an A to B equals CD pattern to the upside. So let's go take a look at what that price projection would be. It's moving into the swing point with volume. Will it take it out? I don't know. That swing point becomes your B point, July 7th. So very important area to watch is that 39.30 level. That's the July 7th high. If that can be taken out with the volume, and today you certainly have the volume, there's only 486,000 shares up there. That'll give you a to B equals CD price projection in the 42.45 level. It's trading right now at $36 and change out there. If it takes it out with some substantial volume, I would say more likely what you will see, there's a high volume bar broke down and started to break down right around the trading session of March 20th, 21st out there. So I'd have to say that becomes, that 1-to-1 A to B equals CD looks like that's probably all that it's going to get, because at the low of that high volume bar, March 21st, that's the supply area, that happens to be 42.77. And 42.45 is your 1-to-1 A to B equals CD. It's got to take out that B point first. That's ticker symbol CRTO. If we take a look at Splunk, let's go see what Splunk is doing. That's up $11 right, or 11%, up $4 and change. That's taken on a swing point as well. That swing point here recently came in on July the 30th, 2.7 million shares. You're up into that level today with 2.5 million shares. So you're moving into that with volume. Ought to be able to get over it and then get up to the next swing point area where it also runs into an old resistance line from its TAS market profile. That's the July 2nd high of about $56.63. This has been consolidating. If it can break above that, then you're looking at a price move. Now, this has broken a downtrend. The consolidation pattern is basically, we'll call it, let's use the conservative one, the August 8th low, $40.71, and the top of the consolidation right around the 56. So you've got about a $16 consolidation. If Splunk can get above 56.62, you're looking at a move to what? That would be $72 or so. Let's go see what's at $72 waiting for Splunk out here. $72 would take you into, I don't see really a high volume bar or anything that's got to worry about. Now, it does have some volume at the highs out here. So maybe Splunk it's not like it stands out as a huge high volume high out there, but it could be headed all the way back up to that 106 level. That would be a 100% move from where it's trading at right now at the $50 range. That's on Splunk. Let's take a look at a couple things moving to the downside out here. Leading the charge to the downside is Wynn Resorts. Now, it's off just about 1%, down $2, but Wynn Resorts does not look to be the healthiest out here. This has, and it's trading inside its swing point low, which is an important area for Wynn Resorts to hold. And that's the April 28th day. That's the April 28th time frame and date. 3.7 million shares, and the low out there is at 188.43. Now, as prices move down there, let me just take a look here. Here's that bar. Let me see what price has been doing as it's been moving down there, about that 3 million shares. It came in with volume into that bar back on August the 7th. We've got light volume obviously going on right now. Monday and Tuesday, because it's inside that swing point, Tuesday, Wednesday or so, it's going to be important to watch Wynn Resorts because it could begin its next leg down. If it does take out that low, again, that low being 188.43, that will set up, with volume, by the way, that will set up a fairly large A to B equals CD to the downside inside of Wynn Resorts. That would actually give you a price projection of about 161.45 to maybe 144.89 out there. Let me put this on a weekly time frame, see if anything sticks out at us. This is in Wynn Resorts out here. So here's an equity most certainly has not participated in this nice run that we've had off of the August 8th lows out there. And so if the market does turn, Wynn Resort is probably one place that we want to take a look at. So what's Wynn Resorts doing? I'm glad I went ahead and put the weekly chart up on my screen out here. We talked about that swing point low. That was from, I don't know if it's April 28th, I believe. That's also the weekly, and it's high volume on a weekly. Price right now is up against its market profile low. So it's up against support. It's trading at 194.57. It's probably 194.56 or somewhere right around that level. So it's trading right into a number of areas of support. And what Wynn Resorts has not done on a weekly basis ever since July 29, 2013. It has not broken below a weekly unfair low. So it would be certainly changing its character out here if, in fact, it were to do that. Then you could expect those lows to become a resistance area. That is on Wynn Resorts, ticker symbol WYNN. Also moving to the downside out here, we've got Candy Technologies. We've got Big Lots. I'm looking percentage-wise. What do we have out here? We've got ticker symbol TSCDY. Tesco PLC is a ticker symbol. That's our biggest mover to the downside, percentage-wise, off 6% this morning. What do they do out here? They are they operate grocery retail stores out here. So I don't know where, but let's go see. Looks like they're marking things down here this morning. Trading out at 11.59. Let's go. This looks pretty bad, doesn't it? This thing here has been in a steady decline ever since the time period of November in 2007. And what it's doing right now, it's trading below some important support levels out here. Swing point that on the daily basis back on December 1st, 2008. Boy, talk about a weak stock compared to the market out here. Let's go take that's the weekly that we're looking at as well. So let's take a look at weekly volume. That 11/24/2008 was 829,000 shares. This week here, it has done 1.6 million shares. Not looking good for this equity. Let's put this on a monthly chart. Get a feel for as we end the month here. In fact, we'll go take a look at some monthly charts. Maybe we'll do that during the very last segment out there. I'll go ahead and put some of our monthly charts out here. So it looks like this thing is likely to head all the way back out. Unless this is bad data out here. It should head down to this November 1st, 2007. Let me put the daily chart back up on the screen. See what might be in here on November in 2007. Let's not even worry about it. Daily-wise, 400,000. Let's just, there's no bottom fishing here. There's no reason for you to take a look at TSCDY. It just happens to be the largest mover percentage-wise to the downside, showing up on my screens as we speak this morning. Las Vegas Sands, they're trading to the downside as well. Let's go take a look at the health of that stock chart. Down 71 cents. It is a daily chart out here, and it's also trading into a most recent swing point low that takes us back into August the 7th. So the market makes a low August 7th when you take a look at the indices out here, not the futures market, the indexes. And the markets as well. So now you've got Las Vegas Sands also showing you a picture of being unhealthy. Now, trading into its daily unfair low, its market profile, that's right around the 66, probably 94, 93 type level out here. But it's also trading inside that swing point from August 7th. So that low should get tested, 65.83. Closing below that, looks like we've already got an A to B equals CD projection out here of 64.06 to maybe 59.38. That is on Las Vegas Sands out there. If we take a look at what else? Chicago Bridge, that's down about 1%. That's off 60 cents. CBI is the ticker symbol. Let's go see what it is doing out here. This too has been struggling. As of late. Well, when I say as of late, ever since April in 2014, this thing has been in a steady descending price channel out here. Today, it's trading out at about 63.21. What do we have down here? I don't see any signs of strength coming off of the bottom here inside of Chicago Bridge. Let's put this on a weekly chart, get a feel for maybe what this is doing on the weekly time frame out here. Yeah, actually over the Chicago Bridge on a weekly basis, this candle formation right here, this is the week of July 28th, August 4th, August 11th, and August 18th. This is what's referred to as a Morningstar reversal pattern. So out here, this does have some pretty decent support. Any close below the August 4th low, that would spell curtains. That's 57.54. Let's see where those curtains could possibly take us to. And that's this high volume bar out here. So any close below that in Chicago Bridge, that's going to bring the price level of 33.86 to 35.75 into play out there. CBI, again, is the ticker symbol. So see the futures here pushing the lower this morning. Let me take a look at net declining issues. We don't have net declining issues. So we're at net advancing issues as we speak inside the New York Stock Exchange. So the market breadth is still pretty positive. What's the number? What is the number that we want to be paying attention to today? Give me a moment here. I'm going to pull that up on a different screen. Of course, I have to open up a file to get that. The number we want to be watching for is 14.15. That would be a negative 14.15. So we don't see that. So the push down that we're seeing in the futures market out here right now, I have to say it's not real, meaning that we should see the futures bounce. Now, where is it that low is going to be put in out here? I don't have that. I don't see it here as we speak right now. When I say I don't see it, I'm just looking at some other screens just to try to get a feel. I would have to, we're at 1997. I would say at 1993.50 is the area that I would be targeting for where we should see the ES Mini maybe find some support at bottom. And what I'm looking at here, folks, if you're watching this on Tiger TV, I've got the 120-minute time frame chart up on my screen out here. And the market profile resistance level that it got above yesterday is at 1993.50. And what we're going to find out is old resistance going to become new support. Now, as the ES Mini busted above that level at 12 noon yesterday, during the 2-hour session, so from the 2 to 4 p.m. session, during that time period, we saw price come back and test that level. It acted as support. In essence, we saw that same thing take place into the 4 o'clock close. It was probably like right around 3:15 or so when we saw 3:30 when futures went ahead and pushed lower out there. And then they simply went ahead and they made higher highs all through the evening out here. 4 o'clock this morning, we saw the S&P futures get up to 2,375. So my expectation at this stage here would be that 1993 ought to act as support. Hey, if we get a close today below 1987.75, we probably see the dynamic of this nice big run from August 8th actually change its character on the daily basis. 877-927-6664. This is Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. We've got the Dow's off 13. S&P is flat. It's up 46 cents. NASDAQ up $3. Russell up 9 pennies. NDX 100 up about 3. So the market, really, the expectation would be that we'd have maybe a flattish type market, maybe a little bit of gyration out here. Remember, we've got light volume, probably one of the lightest volume trading sessions of the year. With it being the last week of summer for most out there. So I don't expect the markets will get out of hand or anything. What is kind of interesting here is if we take a look at some currency pairs, and most specifically what I'm looking at is the euro-Japanese yen. If you're watching this on Tiger TV, you're going to see two trend lines that have been drawn. Now, the Euro-Japanese yen currency pair came off of the lows in July of 2012. And this currency pair is an excellent currency pair for helping to identify the direction of the market. This is the carry trade out here. It has been, it is, it still is out here. If you're looking for a currency that tracks the U.S. stock market, this is the best one out here. Now, what's interesting about this currency pair from a trend standpoint, if you use that low on July 27th, which was $94.10 out here, the next touch point is going to be the November 16th low. Now, November 16th, 2012 was a significant low in our marketplace as well. That price point is at 100.31. And price has just been steadily in a descending trend. That's the red diagonal line on my screen out here. So we've created this little cone out here. And price has actually tested the bottom of the trend. Now, from a bullish standpoint, what you'd like to see is price bounce off this level and actually break that trend line to the descending trend line here to the upside. If you see that, that's going to bode well for the markets. Whereas, now I don't get my skirt up too much here when price breaks trend lines by just moving sideways. That's all that it's been doing here as of late. Nonetheless, next week, the week after, is going to be important for us to watch the Euro-Japanese yen to see what it is going to do, and looking for a message inside that currency pair. One of the other things that you should watch out here today, well, we'll go take a look at the U.S. dollar-Japanese yen as well. We pointed out that this was the long trade out here from a currency standpoint. We did that back on the trading session of July 30th. And the reason that we did that was because when you take a look at trend lines or channel lines, you'll see the two red lines, diagonal lines from upper left to lower right on my screen out here. Last time that the the U.S. dollar Japanese yen broke a trend line was back on November the 8th, and it made a nice move. It went above. Didn't make a full 1.272 expansion of its swing points, but it did make an expansion of swings. I expect we're going to see the same kind of thing take place here inside of the U.S. dollar Japanese yen as it continues its next move, which should be the 104.73 level out there in the currency pair. A quick peek in on the euro here. The euro U.S. dollar, gap down on a Sunday evening. There have been a couple. There was one attempt at a reversal signal. And that was a trading session here, bullish engulfing candle. That was on August the 27th. And that has failed. It really says from an A to B equals CD standpoint, more likely the move is to 1.3075 to 1.3019 out there. Now, what do we want to pay attention to today? I gave you the number of net declining issues to focus on. And I can't control what the market is going to do, but I do know if we see more than that level of net declining issues that I gave you one more time, that is 1,415 at the end of the day. That is not a good scene for the overall market, for the larger breadth of the market. The other element to be paying attention to is going to be that volatility index. And as we take a look at it, what we know yesterday is that volatility index got up towards that 50-day exponential moving average. It acted as resistance. Right now, the 50-day exponential moving average is priced at 1279. That's the other number to be watching today. 1204 is, what it's printing at right now. So, folks, stay tuned. The Nadex Bull Bear binary option hour is up with Tom O'Brien and Daryl Martin. Then we got our man Basil Chapman following that. And have a safe weekend. And I look forward to seeing you come bright and early Tuesday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.